All right, so we're still looking at this question. Manga has a business for many years. His accountant has extracted the following balance from his books of accounts. About information here. I hope everyone has got their answers from yesterday or their workings as well as still working through this question. Right, so they've given us additional information. Stock at 31st December. Just hold on. Hello. Okay. Yes. So we've got our additional information here. They've told us stock at 31st December 2008 was valued at 15 million. This is our closing stock. Insurance included 500,000, which was prepaid. Colleagues, do we still remember how we deal with prepayments? Anybody? How we deal with prepayments? Yes, it is an asset, a current asset. Yes. What are we going to do with this prepayment here? Apart from including it in our balance sheet under current assets, we deduct from the insurance expense. Okay. Remember, prepayments you deduct from the expense and you also include it in your balance sheet under current assets. So in the trial balance, as we can see, our insurance is 2 million, right? So we're going to have to deduct this prepayment. I hope that's what we did. So we'll say 2 million minus 500,000. So our new insurance expense, we have originally our insurance expense on the trial balance is 2 million of a prepayment of 500,000. So our insurance expense is 1.5 million. Any questions, colleagues? Are we okay with that? Questions, clarifications? That's how you deal with prepayments. Deduct it from the expense and you include it as a current asset. Yes? Mhm. You subtract from the named expense. So in this case, this was a prepaid insurance expense. That's why we're deducting it from insurance. Please come again. I can't really get you clearly. Just speak a bit louder, please. Okay, okay, okay. In the additional information we've been told, insurance included 500,000, which is prepaid. So we know that we're dealing with the insurance expense. So they'll always notify you which expense to deal with. They'll never give you a case where you have to now think, where do I have to deduct? No, it will be stated blatantly in the additional information where the prepayment is coming out from. Anything else, colleagues? Okay. Depreciation is charged on office furniture at 10% per year using the reducing balance method. Did anyone get the depreciation expense? Did any of us tabulate the depreciation expense? Okay, that's nice. That is nice. At least we got to learn a lot then. All right. So, colleagues, as a group, what did you do with? How did you tabulate the depreciation? Um, did he sent it on the group? Maybe if he's got the answers. I'm just waiting. I just want to know the answer. What you got as your answer? Okay, let me see. Let me check in the group. He never posted anything. Okay, okay, okay. Yeah, okay, I can see it. All right, all right. All right. Let me just see then. Oh, okay, okay. This is just when okay. All right. So for the depreciation, it's correct. Reducing balance method, the formula is for the reducing balance method is depreciation equals cost minus accumulated depreciation times the rate. Yeah. So office and furniture at cost is 5 million. Accumulated depreciation, oops, not here. Accumulated depreciation 2 million. Okay. Times 30%. And 5 million times, or not 30%, 10%. 5 million minus 2 million, that's 3 million. 10% of 3 million is 300,000. So, wonderful colleagues, you did it correct for the depreciation. Any questions? For those who were not able to see the document. Okay, we'll go to the next information. At 31st December 2008, there was an amount owing for salaries of 1 million. This is an accrual, and you stated that correctly in your work. But you forgot to add it to the salaries amount. And this 1 million, apart from it, Being a current liability, you add it to the salaries. Accruals, all right, accruals, these are expenses that you do not pay for, so they build up, all right? So if we have an accrual of 1 million for salaries, it means this amount here on our trial balance, we have to adjust it because this amount is not including that expense which we haven't paid, all right? So we need to include it to the salaries expense, this accrual. So accruals, you add them to the named expense, and in the balance sheet, they come under current liabilities. All right. Then prepayment you subtract, and it goes in the balance sheet as a current asset. So your new salaries expense is supposed to be 26 million. Then this 1 million will be in our balance sheet as a current liability. Any questions, colleagues? A bad debt of 1 million included in the trade debtor balance of 20 million is to be written off. Right? So according to your answers, yes, you did the correct thing. You subtracted this bad debt money which we won't get back. We are certain that we're not going to get it back. Either the person who's owing us has passed away, maybe they've run away, maybe they're a good crook. So when you're crooked by them, you'll never get your money back. So you deduct it out from the trade debtors balance. Remember, debtors, these are the people who owe us money. So our new trade debtors balance would be 20 million minus 1 million. I hope you also included this 1 million bad debt expense in your statement of profit or loss. Or check your statement of profit or loss made. Yes, this is our new balance for trade debtors. All right. In this same amount, 950. How did you get 950 for bad debts? I would like to hear that explanation. Uh, the five. Are you talking about this 5% for the provision? This you multiply it with. No, this you multiply it with the trade debtors balance, not with the bad debts. This is No, it's okay. It's okay. That's part of learning. So we now know. Okay. The bad debts amount, this 1 million, but it's mhm, for the okay. Whenever the okay, the only thing that you did wrong is you got 5% of the wrong figure. All right. You got 5% of the wrong figure. This 5%, you are supposed to get 5% over the debtor's amount, which is 19 million. Get 5% of that. Okay. Otherwise, you, yes, yes. Now I'm saying, because on your statement of profit or loss, bad debts is put as 950 when it's supposed to be just this 1 million. Yes, that's why I was saying that you got 5% of the wrong figure. That's why you went wrong. All right. You got 5% of this 1 million, right? 5% of provision. Okay, okay, okay. Okay. Let's see. Oh yes, yes, you got 5%. Okay, okay, yes, you did 5% of 19. Okay, okay. But then this 950, okay, where you went wrong then is this. This 950 is not supposed to be in the statement of profit or loss. This 950, you're going to deduct it from the trade debtors, this trade debtors balance in the balance sheet. All right. Yes. In your statement of profit or loss, under bad debts, you should have just put 1 million. Yes. And this 950 that you have tabulated, which is the new amount for the provision, was there even an existing provision first in here in the trial balance? Provision for doubt. Okay. Okay. You are supposed to also compare it. Mm. You are supposed to compare, yes, the 950 and the 500,000 that you calculated. You're supposed to compare the two to see if there's an increase or a decrease in the allowance for receivables. Okay. And, so that increase, you treat it as an expense in their statement of profit or loss. Yes. Mhm. No. Yes, yes. You write increase in allowance for receivable. Yeah. It's 450. Yeah. Yes. So at least, so you're catching on. Mm. The way you did it, it was correct. You do 5 million minus 2 million, cost minus accumulated depreciation, and you multiply by the rate. 300,000. 300, 300,000. Wait, you didn't do what? You never included this 300,000 in the statement of profit or loss. I've seen it. It's here. No. Oh, this 1 million. Okay, 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 okay. Mm-mm. 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 Mm. This is, let me, since we've reached that part, let me explain so that we all get it. We all get the point. Okay. So, first thing we did, we removed, where is this one for the bad debts here? Where was I tabulating it from? Oh, here it is. Here it is. Okay. This 1 million, the bad debts, you remove it, you deduct it from the debtors amount in the trial balance, you remain with 19 million, right? Then this 1 million will be an expense in the statement of profit or loss. Okay. This bad debts will be an expense in the profit or loss. All right. Then the next adjustment was for the allowance provided for allowance for doubtful debts. All right. So they told us it's 5%. So you get 5% of 19 million. All right. The debtor's balance, right? 5% of 19 million is the 950 which was tabulated. Huh? We just verify with my calculator. 0.05 times 19 million. Yes, 950,000. All right. This is our new provision for doubtful debts, or our new allowance for doubtful debts, 950,000. All right. And this is the amount you're going to deduct again from the trade debtors amount in the balance sheet. All right. In the balance sheet, you see we have to deduct 90 million minus 950,000. That will happen in the balance sheet. All right. Then this 950,000 which we've tabulated, since in our trial balance we already have an existing provision for doubtful debts, which is 500,000, we compare the 950 against the 500,000. All right. So we've seen there's an increase. Want to see the increase is by how much? So you say 950,000 minus 500,000 at 400,000, right? So this increase is going to be treated as an expense in the statement of profit or loss. All right. Are we okay, colleagues, with this? No allowance for doubts. Yes, yes, as you have seen, I've highlighted. Yes. Hmm. Hmm. How to treat it. Okay, so all right. So as we recall, provision for doubtful debts, this is money that you expect that you might not get from your debtors. All right. That's why we are also deducting it from the debtors amount in the balance sheet. All right. Because this 950 is representing what we're expecting not to get. That's why we deducted it. All right. Then what was your second question? What was the first question? Oh, let me see. Okay, so what I would say is because it's going to be treated in the balance sheet, all right, I don't think that's why it's also brought back in, it's also treated in the statement of a profit or loss. Because if you include this 950 in your statement of profit or loss, you're saying this is the amount I don't get. Then you do again, you deduct again from the trade debtors, it will be like you have doubled this amount. So the only thing that you need to do from it is just deduct it from the trade debtors amount, all right? Because we're expecting not to get it. So we can't really consider it as an expense, but it's more like an estimation of money that we might not get. So that's why I would say it's not treated in the statement of profit or loss. Yes, that's very true. Mr. Tapiwa, you're really understanding this topic, this course, huh? Accounts. Are you an accountant? That's what you've said is okay, okay. But how you've explained it is that's actually accurate. The only expense that we're going to treat is the increment in the allowance for the receivables. I believe those were all the adjustments. So the next thing is to prepare the statement of the trading account and the statement of profit or loss. So we compare and contrast. I already made mine. Let me compare it to yours. All right. So we all remember the purpose of this statement of profit or loss to get gross profit. All right. So you start with your sales, how much you made in sales revenue, 100 million. All right. Customers returned goods back to you worth 4 million, worth 4 million. So you have to deduct this 4 million from 100 million. So our net sales are 96 million. This is how much we made in revenue due to sales. Are we clear with this first part? So from your workings, you got the correct gross profit. All right. The next, we tabulate our cost of goods sold. We start first with our opening inventory. This is the inventory we begin with at the end of the month. Its value is 10 million. All right. This is how much it costs. We brought in new inventory worth 55 million. All right. Our supplier also charged us a delivery fee of 1 million, which is our carriage inwards. That's why we're adding purchases with carriage inwards. All right. Because we incurred this delivery charge. So let's say 55 million plus 1 million, we get 56 million. Now we've got our goods, then we find some are bad. These bad goods, they are worth 5 million. So we return them back to our supplier, which is called purchase returns. All right. So when we return them back, it means our purchase cost also has to go down. Okay. Because we returned goods worth 5 million. So we deduct this 5 million from 56 million. All right. To get 51 million. All right. So this is our net purchases expense, 51 million. All right. Then we have to add the value of our inventory, 10 million. 10 plus 51 million, that's how we get 61 million. All right. This is the total cost of goods available for sale. Now we are interested in getting the cost of the goods sold. So to get the cost of the goods sold, we deduct our closing inventory. These are the goods we remain with at the end of the year. They haven't been sold. We tabulate their value. It is 15 million. All right. So when we deduct 61 million from 15 million, we get 46 million. This 46 billion represents the cost of the goods sold. After we tabulate the cost of the goods sold, we can to get our gross profit, it's the revenue, 96 million, minus the cost of the goods sold, 46 million. And that's how we get our gross profit of 50 million. This increase, it's 450, not 400. Are we okay with that, colleagues? All right. Next, now we tabulate our expenses. All right. We tabulate our expenses. Salaries. Remember, we had that accrual of 1 million. So our new balance for salaries, 26 billion. Our increase in the provision for doubtful debts, which is 450,000, add it there. Right? If it was a decrease, if whenever you have a decrease in the provision for doubtful debts, you add it to the net profit. I mean, to the gross profit. I want you to keep that in mind. Our bad debt, which were written off, the 1 million, if there is a decrease in the provision for doubtful debts, right, that decrease, you add it to the gross profit. It's treated as a gain, and the gain is also treated like a form of income. So if you remember your gross, after you get your gross profit, you add any forms of income the company got. So if there's a decrease in your provision, you add that decrease to the gross profit. Our insurance expense, 1.5 million. Depreciation, 300,000. Office expenses, 15 million. Right? You total all of these up, you're supposed to get 44,250,000. These are your total expenses. All right. And then these total expenses, we'll subtract them from our gross profit to get our net profit. Right? That's the purpose of the statement of profit or loss. To either get your net profit or your net loss. So when you subtract 50 million from 44,250,000, your net profit is 5,750,000.